Trust me, there is a lot of excitement in store. We'll continue to bring you stories where the markets will be focused or putting the spotlight this morning. But the first story is on your screens. Trump's tariff imports, and you're calling it really the tariff tantrum because that's what it is boiling down to. And this time around, it's against Canada, EU, and Germany. So let's quickly go across to Mark Toe and get his perspective on it. That's the dominant story overnight from the United States. U.S. slapping tariffs on steel and aluminium imports, and I'm given to understand that the U.S. consumes about 10 to 20% of global consumption in both these commodities. Mark Toe, who's Managing Director of Asset Management and Head of Research at Fung Financial Group, joins in with his perspective. Mark, he's at it again, and I think that's going to cause a fair amount of uncertainty in the markets for now.
Yeah, I think the overall sentiment is not quite good, but of course it is somehow expected because for trade wars or the other things, these are all uncertainties that people have to deal with. And for the present moment, I think the short-term speculators as well as the long-term investors, they have to look for some reservation and have some kind of safe haven for the investments. But of course, what the Trump administration has been doing in the past few months, I think people have been getting used to it. The uncertainties around the actual policy changes or even the changes in the regime or the rules of the game will somehow be expected, and the effect upon the asset prices will be gradually dissipated. So at this moment, I think people will react very immediately. But for the medium to long term, I think all asset prices will tend to be reflecting the fundamentals most of the time.
So where do you think things could move? I mean, the fear of the trade war was that it could be a fight between two behemoths, two giants, US on one side, China on the other side. Now the giants don't want to fight. So this entire argument of trade war, do you think suddenly gets nullified?
Yes, it is relevant. I think the whole argument or even the debate is that the Trump administration right now is going to have some kind of changes on the present regime of the balance of powers in different areas. So I think the changing of the game rules of the game will somehow create some impact on the asset prices for the market participants, including the trade wars, the imposing of the tariffs on steel and aluminum. I think all these things are to be viewed holistically, to be viewed globally in the same context. It is not something to be analyzed in bits and pieces because it is the whole thing that Trump is going to do because he is now trying to prevent the other people to treat him to be the same presidents in the past. I think at this moment the uncertainty around it is the most important. But of course, any trade wars will mean that people have to suffer because fewer trading volumes will sooner or later be reflected in the slower growth in the GDP as well as the integration of the trading partners. So I think it is not a good. Of course, it is not a good news for investors from the medium to long term. But of course, if you look at the asset prices from the different angles, such as the money flow from bond market to equity markets, I think it may slow it down to a little bit because we can see that if the trade war or the other uncertainties around the Trump administration is going to be more serious,
it can cause a fair amount of nervousness. I think that's the larger point. Right. This just punches a hole into what may support global growth in the near term.